Ade. I'm Chartered, your accounting tutor. In today's video, we are going to continue from books of original entry, where we are trying to illustrate how transactions are recorded in the journal proper. Mind you, in the previous video, we started posting illustration in the journal proper, and this is just the continuation of some of the examples. Let's go to the next example. On the 5th of March 2026, goods withdrawn from the business for private use. Goods withdrawn from the business for private use. Mind you, when we say that private use here, don't forget, anytime you see private use or personal use means drawings. Then here too, as the journal of debit and credit, you must identify which account to be credited and which account to be debited. In this case, discover that the account to be debited becomes drawing because goods have been taken out of the business and goods taken out become the giver. But mind you, there's no area in accounting where we have goods account. There's nothing like goods account. So if goods are withdrawn out of the business, it means they are taken out of the purchases. Purchases are goods bought for resale. So if some of the goods are taken out for private use, it means purchases. The purchases that have been giving out goods for use. So now purchases become the giver account and then drawings become the receiver account. Mind you, this principle doesn't try to contradict what you know where I said all purchases are debited. But this is the only exceptional case whereby purchases is credited. When goods are taken out of the business for personal use means the goods that are meant for resale have been taken out. They to reduce the value or the quantity of goods available for resale, and that is why it is credited. And mind you, this is the only area where the purchase will be credited as far as the principles of double entry is concerned. So let's go and pause it quickly. Here, mind you, in the journal, the debit entry must be recorded first. So here, drawings is going to be debited. On the 5th of April, drawings, here we have general ledger 5, and then we have 20,000. Then, as I said, purchases will be credited in this case. And purchases is credited, and mind you can see the indent, always indent clear to show that this transaction is moving in the credit side. And then purchases will be credited with 20,000. And the explanation you must start with the way being to record goods withdrawn. Make sure the explanation is short, like being to record goods withdrawn. And the goods are withdrawn. If we go back, the transactions that are withdrawn for private use. The next one is this entry. Like the date, somebody will ask, why is it that this date is different? This date is different because I want to explain how opening entries of an existing business. The business is already existing, it's not starting new. So any business is already existing because of going concern, the business must have opening balances of the previous month or the previous year as the case may be. So that is why I now go back to start with 1st of April means the business closed in March, then it will begin 1st of April. So opening entries must be at the beginning of the business, either in the month or year or quarter as the case may be. So let's look at it. The business of Mr. Charter have the following balances in the books as at this date. Cash in hand was 50,000, bank balance was 200,000, furniture worth 20,000, equipment worth 30,000, trade receivable, that is what we call debtors, 50,000, trade payable, what we call creditors, 60,000, and loan worth 100,000. These are the balances in the previous month brought to the second, to the other month, which is April. How can you address this? These opening balances can be addressed in the journal proper. Mind you, I told you that all balances, all transactions must first pass through the book's original entry before you take them to the ledger. These balances can also appear in the ledger as opening balances, but the first place they will find themselves is in the journal proper. Let's see how we arrange them in the journal. We post the journal proper. Mind you, here in the opening entries, there are two categories of opening entries in accounting. We have assets and liabilities. And then the general principle is that all assets are debited in accounting. All assets acquired or owned by the business are debited. Then the other one is liabilities. All liabilities are credited. All liabilities are credited. So we have only two basic opening entries in accounting. It's either assets or liabilities, and then you also have capital as an opening entry. So these are the opening entries we have. So mind you, the basic rule of recording opening entries is that all assets are debited. Then you record the assets first. Even if they are 10, 20, they must come first. Then the liabilities will come second. Then from there, you have to derive your capital because of the accounting equation. Because of the accounting equation that says assets minus liabilities is equals to capital. So if the capital is not there, it means you have to derive your capital. So by the time you get the assets and subtract them from your liabilities, what remain become the capital. So here you must bring the assets first. So the first assets there, and if you want to arrange in the real order of accounting, the non-current assets must come first before the current assets. So in this case, we have furniture being debited here, 20,000. You just put them all in the debit side. Equipment 30,000, trade receivable 15,000, bank balance 200,000, and cash balance 500,000. They will now come to the credit side. They will now come to the credit side. Then the credit side too, you now bring your mind. You see the intent. You must indent those going to the credit side. So here too, the liabilities based on principle will be credited. And here the liabilities, you have the trade payable, which is 60,000, and the loan. Though I mix them up here, but mind you, loan is the non-current liability which is supposed to come first. Let's rearrange it quickly so that you get it right. Because the non-current assets based on the arrangement of accounting should come first. So the first one that will come to liability side should be that of the loan. And loan here is 100,000. While the trade payable, but mind you, you can see all these are on the same level. Then the ones going to the credit side should also stand on the same level, moving in the credit side. And this is your trade payables. And trade payables is now 60,000 naira. So you can see that liabilities have been credited while assets are debited. Then if you post, you discover that in ledger, in journal, the two sides must be equal. Watch here, this side is 20,000 and this side is also 20,000. It means it must balance. That's why you are closing it. So here, you discover that the assets total here is not the same thing with the liabilities total. Then it means you must balance the account. And that is why we are going to introduce capital based on the accounting equation to make sure that the two sides, the debit side and the credit side, are the same. And that is why you now take the total of the assets, which will be the asset, then bring the total of the liabilities, which is 160, and by the time you subtract, you now get your capital. And then you now bring capital, which was not in the question, but you must derive it, so that the two sides must be equal. So in this case, the capital now, after subtracting the total assets from the liability, because the capital is 155,000, then it's going to be this side and the debit and credit side are equal. So this is how to record opening entries of an already existing business. Simple principle. All assets should all be debited and all liabilities should all be credited at the opening, and then you find your capital. And mind you, we don't have any other thing in opening entries apart from assets and liabilities, and then possibly capital to make sure the account agree. So we now narrate by saying, being to record the opening balances in the books. These are the opening balances in the book. Being to record the opening balances in the books of Mr. Chatter. Mind you, this is how to post opening balances in the journal proper, which most learners on a good day might not even understand how such transactions are recorded in the journal proper. Continue to follow my video because my target is to break all the topics in accounting in such a way that any topic you have issues, it's just for you to go and watch my video. Follow. If you have any comment or any question, go down the comment section. Make sure you ask any question that you're not clear. I'll come back to address it. Don't forget to like my video, share to anybody that has such a problem so that the knowledge will now circulate. Thank you. I remain Chatter, your accounting tutor.